Welcome! CPA Planet lessons help you get more points on your CPA exam. These lessons provide clear explanations from the student's perspective, visual learning, and we even try to make it interesting and entertaining. Enjoy the lessons and pass the CPA exam. Okay, we're going to study a very important lesson. This is C-corp. C-corp is a very important taxation lesson. There's a lot of rules associated with it. They will ask lots of questions about C-corp. You study this, you learn this, you will do well on these questions, you will get points in the exam, you will pass, and you will work for, or you will own your own C-corp. So we're going to cover in the C-corp lesson, we're going to go over the introduction of the lesson. We're going to do the formation of C-corps, the operation, the income, the exclusions to income for C-corps. This is in the news. They have news stories about C-corps not paying enough taxes, whatever. This is all relevant. Deductions for corporations, credits for corporations, something called accumulated earnings, very important concept. Alternative minimum tax for C-corp. Then there's depreciation rules for C-corp, taxation rules for C-corp, and then you've got distributions, liquidations, and reorgs. So we're going to cover all of those items about C-corp. It's not difficult, and it's interesting, and we'll get through it, and you will have a lot of fun, and you will do well. So let's now start with the introduction of a C-corp. A C-corp is a taxable entity owned by the shareholders. Other taxable entities, which we will study, include individuals, sole proprietors, partnerships, S-corps, LLCs, LLLCs. We're going to compare C-corp to these other entities. That's our business structure lesson. We'll do it a little bit here, but the business structures lesson compares all these entities. As we said, we're going to look at the following parts of a C-corp: formation, income, exclusions, deductions, credits, accumulated earnings, alternative minimum tax, depreciation, distributions, liquidations, reorgs, and dividends. Very important. 3 things to know as you study on almost every part of C-corp taxes. You should know, whenever an event happens, you should know what's the gain, what's the loss, and what's the basis. We're going to study, as various events occur, we're going to study what happens to gain, loss, and basis. Okay, let's talk about the formation of a C-corp. Corporation is formed by investors giving property, cash, or services in exchange for stock in this new corporation. It's exciting. The corp gives stock to investors, and investors give cash, property, services to the corp. So imagine yourself, you give cash to the corporation, which is an imaginary entity, but say you and 3 of your friends give cash to the corporation, you get stock back, the corporation now owns your money, and you own the corporation. Does that make sense? Stock for property. What's the tax consequences? Okay, so investor, you and your friends give property, corporation gives stock. What are the corporate tax consequences? Generally, there's no gain or loss recognized to the corporation when they issue stock. Okay? What are the basis consequences for corporation? Corporation basis in property is the greater of net book value or debt assumed. Okay? Covering a lot of things in the beginning here. You give them property, you give them your car. First of all, there's no gain or loss. Okay, they don't get a gain or loss. You give them their car and they give you stock worth $1 zillion, no gain or loss. Basis, what's their basis in the car? Okay, it's net book value, or if you give them a car, but they're assuming debt on the car of $20,000 and the net book value of the car is $50, the larger of those two is the debt assumed. That's going to be the basis of the property. Okay? Stock for services, we got the same question. You and your buddies, you're giving services. You guys are painting the roof. You know, it's hard to imagine this sometimes, but you're providing your services somehow to this corporation, and they're giving you stock. So, I mean, the real example is if there's a large group of people and some guy says, okay, I'm going to provide my legal services, I'm going to provide my accounting services, I'll provide my plumbing services, and, you know, it's a group of 500 people, and this guy provides the services, he gets stock. Okay. Shareholder income tax consequences. The person who gives the services, you got income equal to the fair market value of the stock received. Okay, so you paint the roof for these guys. They give you stock. Your income is equal to the fair market value of the stock received. Shareholder basis consequences. The basis equals the fair market value of the stock received. Income is fair market value, basis is fair market value. Corporation basis consequences. Corporation gain consequences, no gain or loss recognized. Corporation expense deduction. Corporation has a salary expense deduction unless the services rendered were an educational expense. And as we said, there's no gain or loss. So that's the formation of the corp. We're going to continue with that.